Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, just after the close, August 21st. NASDAQ, NASDAQ, NASDAQ. QQQ's NASDAQ 100 said, "Get off my lawn." Just mark time for the last 3 or 4 weeks, as good sectors do, before moving to a new high. Remember, we always talk about how do stocks and sectors and indexes correct. They can correct through price, time, or a combination of both. What we've seen in the Qs over the last 3 or 4 weeks prior to this week was just a backing and filling, just marking time before this move higher. It's a sign of a very healthy index. I know reading headlines, COVID headlines, election headlines, problems with China in terms of trade agreement headlines can sometimes get us off course in what really determines price in the equity markets, and that's supply and demand. And obviously the demand for high quality, high growth, large cap names is very solid here. Each slight pullback is met with new demand. We've talked in the past, specifically since the Fed started taking rates down towards zero, that liquidity has to be factored in to a buy-sell decision on an investor's part. These headlines can be scary, they can be nasty. You have to counter that with the amount of liquidity that's out there looking for a home. Sometimes that home also is going to go to an area that can pay you 2.5% in dividend yield versus a 10-year at 60, 65 basis points. Makes things very attractive on the equity side. One thing we know, there'll be volatility. There'll be ups, there'll be downs, there'll be rips higher, there'll be dips lower. But right now, in this type of market, those dips are being bought. So if we're sitting on some cash, as we are in a couple of our strategies, we're still looking for those dips in the strong areas and comfortable buying in to the areas that haven't participated, such as industrials, basic materials, banks. We mentioned those the last 3 or 4 weeks. Came out of July, nice move in basic materials, nice move in banks, nice move in industrials. Then you get this little pullback over the last 5 or 6 sessions. Ideally, these sectors, these securities get sticky right in here. Nice 10% move, 12% move into the 3rd week of August, 2nd week of August, and a 5% pullback. Very manageable. But let's see if that sticks next week. If value can help out growth, that's very solid breath in the market. Now, what are some things that we have to be concerned about? Take a look at this chart. These are the indexes on Thursday. Really a benign day for the Dow and the S&P, but a record closing day in the NASDAQ. When we look at the buy and sell signals from a point and figure standpoint, which just tracks higher highs and higher lows, we see that we're getting a little degradation internally. And what that's telling us is this market got a little more narrow as value, industrials, basic materials, banks, energy started to fade this week. We'd like to see them come back in. If we see the same type of action in our analytics next week, we'll talk about that on Friday and may have to make some moves in the next 5 to 10 trading days. Everybody have a great weekend. Look for the Mousseau's video. He has some bond news, and we'll see you next Friday.
Hi, I'm John Mousseau. I am the President and CEO of Cumberland Advisors and Director of Fixed Income. It is Friday afternoon on August 21st. Very much a doldrum summer week in the bond market. Not a lot of movement, not a lot of volatility. We saw the 10-year Treasury bond work its way down from 71 basis points to 63, a drop of 8 bips. We saw the 30-year Treasury bond go from essentially 144 to 135, a drop of 9 bips. Why the drop in yields? Pretty simple. Concern over initial jobless claims, which expectations was about 900,000. It was really 1.1 million. Surprised the market a little bit, but when you look in the rearview mirror and you think about the resumption of the virus in southern states like Florida, Texas, California, and the West, and what do you have? Well, you have businesses that had opened, had to close down, workers losing jobs. Hopefully they get jobs back, but that's where you got your initial jobless claims. We hope that gets better. Muni side, same kind of drop in yields, and actually they're pretty much at the same level as treasuries on the AAA scale. Muni deals well bid for, oversubscribed, not wildly because of the very low levels, but decently subscribed for. What was the good news? Good news is that we continue to see the overall level of infections drop. We want that trend to continue. It clearly spiked up with the resumption of the virus. We hope this downward trend continues. Another big surprise, existing home sales up 22%. That tells you a lot. And you say, why? How do you have such a big jump? It's easy. 3 things. Very low mortgage rates, number 1. Number 2, what you've seen is a movement of really people away from cities, and we think this is not goes on forever. But for right now, people moving away from the city and metropolitan areas and out to the suburbs. And that is ongoing. It is ongoing at a very, very big clip. And the third reason is there's really a lack of supply of homes. Lack of homes is really driving it as well. So big demand, low supply, sales have gone up a lot. Places don't last very long on the market. So when you have a housing market that is doing what it's doing, that's usually a very good sign for the economy in general and consumer spending in particular. So we're going to watch that as we go forward. Next week, what do we have on tap? Well, we're going to look at durable goods, number 1. And again, we will look at initial jobless claims. That will tell us a lot. And hopefully those continue to work their way down. We saw the Democratic convention this week. We'll have the Republican convention coming up, both virtual. The one thing you have to think about, if you get a Biden election in the fall, that will mean most likely higher tax rates, which means that every municipal bond that's out there would be worth more after that election, and presumably would happen beforehand as people start to compute what would most likely be a higher marginal tax rate into their municipal holdings. That would boost the value of munis, everything else being equal. We hope you have a great week, and we will see you next week. Thank you.